Thank you for watching. Please like and subscribe to our channel.
All right, welcome in everyone. Today we've got a super timely explainer breaking down the absolute latest data from the July 1, 2026 sector rotation report. If you're tracking exactly how the big institutional money is shifting right now, well, you are definitely in the right place. Let's get into it. Just look at this number, a 4.74% spread. Now, in the fast-paced world of sector rotation and weekly market shifts, a spread this incredibly wide, that's not just a little blip on the radar. It is a blaring siren in the financial data, telling us we've got some massive institutional movement happening under the hood. It tells us one thing loud and clear. Strong rotation detected. Capital is aggressively on the move, literally abandoning certain asset classes to pour fuel onto others. So, let's put on our detective hats. Our job here is to cut through all the noise, follow exactly where this money is flowing, and really understand the momentum driving the whole shebang. Okay, let's dive into this. Section 1, money flowing in, the market leaders. Wow, just look at technology. The XLK is absolutely crushing it, massively outpacing the pack with a stellar 2.76% weekly gain. Industrials are catching a pretty solid tailwind too, up 1.35%, and materials round out the top three at 0.34%. I mean, tech is completely dominating this inflow, right? It's a huge, flashing neon sign pointing to a heavily risk-on approach from institutional buyers. They are clearly eager to chase growth, completely regardless of any broader macro headwinds. But as we all know, money doesn't just magically appear out of thin air to fund a massive rally like that. Every single inflow needs a corresponding outflow. The cash has to be drained from somewhere. So, where exactly is all this liquidity coming from? That brings us to Section 2, money flowing out, the laggards. The contrast here is just stark. We're seeing some really heavy losses down at the bottom. Utilities dropped 1.48% and consumer staples fell 1.54%. But man, the sector hemorrhaging cash the fastest, real estate. It dropped an aggressive 1.98%. This massive flight from yield-sensitive, defensive sectors strongly suggests the market is pricing in sustained higher rates. It's basically making real estate highly unattractive compared to that high-growth potential we just saw in tech. Now, what's really interesting about this next slide is seeing the big picture. Section 3, the full market spectrum, weekly performance. This macro view brilliantly lays out the full weekly performance gradient across all 11 sectors. Starting at the very top, boom, there's that bright positive 2.76% gain for tech. But notice what happens as your eyes move down through the middle. The momentum just flattens out entirely. Consumer discretionary is barely hanging on to the green, and financials dip just slightly into the red. And by the time we slide down through healthcare and utilities, that selling pressure visibly intensifies, ending with that heavy, nearly 2% drop in real estate sitting right there at the very bottom. Let's bring it all together. Section 4, the big spread, reallocating capital. So, the crucial point is, when you filter out all that noise in the middle, a very distinct and frankly aggressive trend emerges. We're basically watching a direct pipeline where institutional money is actively rotating away from real estate and funneling straight into technology. This isn't just some minor, everyday portfolio rebalancing. No way. It's a structural reallocation away from capital-intensive, rate-sensitive assets right into the high-margin, scalable growth engines of the market. To quote the July 1 report directly, this represents a, quote, significant capital reallocation detected. That massive, glaring discrepancy between technology's gains and real estate's steep losses, that is exactly what creates that defining 4.74% spread we highlighted right at the start. The numbers perfectly validate the signal here, confirming a truly severe shift in market sentiment. We are witnessing a major structural shift in the market's capital flow, which really leaves us with this final, absolutely critical thought to ponder. With such an aggressive rotation away from real estate and straight into technology, how far will this momentum actually carry into next week? Will tech keep absorbing this massive wave of capital, or is this extreme trend about to completely exhaust itself?